Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and the short-term price action, discussing the weekly candle close, the short-term charts, and even the altcoin market cap and the total cryptocurrency market. Will Bitcoin continue up for the remainder of this week, or are we going to see a pullback? These are questions we're going to be answering in the video today. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, analysis, educational posts, and really everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining the VIP channel, you can do that by clicking the pinned comment of the free channel to find all of our membership information, a video showing you inside the channel, and of course, our 53+ month trading track record. We do have a membership sale at the moment, so you can go ahead and join up for a nice discount. Let's go ahead, guys, and jump into the content. So taking a look at the weekly candle. The weekly candle itself was bullish. We saw not only a massive rally of around 10,000 US dollars during the week as a consequence to that conflict de-escalation with the USA, Israel, and Iran, but we saw, of course, a very strong close for Bitcoin, resulting in a bullish engulfing candle, signifying a dramatic shift in sentiment during the week, and thankfully allowing the price to sustain and close above the critical level of resistance at $106,000. The $106,000 is marked out by this gray horizontal line, or should I say this horizontal rectangle on the chart, a level of which is essentially the line in the sand, a dividing point between the probabilities for a directional move downward or upward into the range high. So essentially, while we sustain above 106,000, the likelihood, and as we discussed in yesterday's video, is that we do see continuations into this next level of resistance at 110,000, provided we can clear the short-term resistances along the way, which we'll be discussing in the video today. So all in all, the weekly candle close was very healthy. Let's move over to the market data. 24-hour volume and 24-hour liquidations. Volume has surged up a bit over here at 53% at 141 billion. Liquidations taking a bit of a jump toward the upside as well here, up 156%. 171 million in total. Actually, a large portion of those liquidations occurring within the last 4 hours, as we had seen Bitcoin and Ethereum see a pretty strong reversal back up after what was a bit of a correction over the last 12 hours. You can see here how that almost immediately reversed back into these highs, which you are now challenging over here. So a large amount of volume coming to the market over here, especially into that weekly candle close, which has now occurred about 10 or so minutes ago. Let's jump over to the S&P 500 and the DXY. Moving as expected, again expecting continuations downward for the DXY, provided interest rates move towards the reduction, provided trade deals come to a close, and of course, provided that escalation doesn't continue, provided that de-escalation between those countries we mentioned before doesn't kind of kick back in, we see escalation resume. So provided all of that occurs, we do expect the DXY to continue down. If we see any of the three occur, so trade deals start blowing out, we see interest rates, or fear that interest rates will not drop, we see more uncertainty from the Federal Reserve, or even we see the escalation in those global conflicts. If any of those scenarios occur, the DXY will very likely jump back toward the upside, and we will very likely see a correction to risk asset markets. But provided all of those things continue how they are, it is more likely than not we see the DXY drop, and it's more likely than not we see the risk asset market continue to rise as we are seeing. So looking at the S&P 500, the S&P 500 is looking fantastic. We've actually just closed our full body daily candle above that prior high. So this is very much now a key level of support, expecting continuations provided we sustain above here. We are now in price discovery. So again, our critical targets are going to be psychological levels, whole numbers, 6,300, 6,400, etc., provided we sustain above this prior weekly all-time high right over here. We will expect continuations upwards. If we drop below this region, we do run the risk of corrections for deviation, but until then, very much bullish, looking very strong. So I wouldn't be too concerned for the S&P. I'd only be concerned if we do see this candle drop back below this high point. That is when we do run the risk of potential pullbacks to the 50 EMA, but until then, it is looking very, very good. In terms of the macro scale, I would say the S&P 500 is macro bullish, provided we remain above 5,700. And if we do take a look at our expectations for the S&P 500, marked out in around, I think we talked about this around 2 months ago, you can see our expectation was that we did see a continuation up into that all-time high, which we have now seen play out perfectly. So let's go ahead and jump into Bitcoin, because like we said, there's a lot to take a look at. Before we get into Bitcoin, go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You get a lifetime trading fee discount of 15%, which will build up to 45% based on your trading volume. You also go to support me making this content for you on a daily basis, and you'll support yourself getting access to the exclusive bonuses, campaigns, and rewards for signing up. Go ahead and check it out. We'd love to have you on there. Trade where I trade on exchanges I trust, and we'll catch you back in the video very shortly. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back in. So we're going to keep today's video short and sharp, getting through the key points because I don't have much time today. So the weekly candle close, guys, very bullish, bullish candle close, bullish engulfing close, but we have some key levels we still need to break up to trigger that next leg toward the upside. When we're looking at the next leg toward the upside and what that really means for Bitcoin and where we need to see the price break to trigger that move, we are still under the critical points of resistance we need to break to essentially facilitate that move upwards. And the most important level we need to break through to facilitate that move is going to be that horizontal resistance. That horizontal resistance, the orange line at 110,000 US dollars. This is not only the upper range resistance of this consolidation we have been in since essentially the beginning of May. So May, June, July, we're pushing on nearly 2 months over here, a little bit over 2 months. But of course, it is going to be the weekly high of this prior weekly close. So again, a very critical point of resistance that we need to break through to see a continuation upwards. If we break through 110,000, we will very likely see this positive momentum shift here on the weekly, because what we can see still is that we do still have that bearish exhaustion, right? On the higher time frame, we do have a bearish divergence still present, but if we were to break 110, we would see the RSI breakthrough, indicating that the bears failed to push the price lower and the selling was entirely absorbed, which will facilitate the next leg up. So although we are getting very close to that next leg up for Bitcoin, there is still a few major points we need to break through to really drive it home. Until then, the probabilities are in favor of continuations higher, because we are sitting above 106, but the downside risk still remains there. Okay, and it will remain there until we break through that 110 level. So although the probabilities that we'll see that downward move are quite unlikely, they are still a possibility and still a reality, and therefore you still need to be, or I think you still need to be very much attentive to that and the consequences that could play out. So in a perfect world, the next weekly candle close we see will be above the downtrend, the weekly RSI, and of course the horizontal weekly high. If we see that play out, it is entirely likely we see a continuation upward into the next target, which will be 115, 120,000. Now, we'll come back to the bearish argument in a second, but let's hang with that next move upwards for now. If we are looking at potential targets of Bitcoin, of course, when we're moving into price discovery, we have no historical data to suggest how the price is going to move. What we have to fall back on is to fall back on, number one, speculation, and number two, theory. So theory suggests that policy stipulates demand, or policy drives demand. So when we're looking at what potential catalysts we have that could drive demand over the next few months, few weeks, few years, we have to look back at this. And the main mechanism that will drive demand into the risk asset market, if we're looking at the risk asset market as a broader concept, not just the individual market, which is going to be cryptocurrency, the main mechanism that really drives demand for risk assets is this mechanism here. And that is simply all centered around interest rates, because interest rates control the cost of debt and determines the value of the dollar at any particular period of time, which influences companies and individuals' abilities to leverage debt to acquire income-producing assets, and or decreases their debt-to-service ratios, which facilitates more spending in the economy, which pushes asset prices higher. So depending on what happens from an economic perspective with interest rates, and more so depending on how the perception develops around future changes to interest rates, will massively influence the current risk asset prices as the market front runs expected future changes now. The market is a reflection of the market is a reflection of what is expected at a future date now. That is what happens. That is how it works. So when we're looking at potential catalysts, yeah, interest rates, a very potential catalyst for continuations upwards, but of course it is not confirmed yet. There is a chance that could reverse. Then we're looking at things like the trade deals. Potential catalyst. If that goes well, yeah, it could potentially be bullish. However, if it doesn't, we could see more uncertainty come back into the market, which will influence the uncertainty around interest rates, which could bring the market down. Then we have the risk of escalations in Iran. Of course, we know already that will drive the market down. And then we have other hypotheticals such as industry-specific policy. We're looking at insurance companies, we're looking at superannuation funds potentially adopting Bitcoin, a cryptocurrency. Now that may happen and that may not happen. When will it happen? Who knows? But these are potential future catalysts which could be bullish for the industry and bullish for cryptocurrency, which could drive up demand. Here is the thing though, when we're looking at all of these, the time horizon on these are mostly ambiguous and unknown. We don't really know when these will come to fruition. We don't know if they'll come to fruition. So it is more speculative. So the next thing we look at is we look at potential psychological levels where people will most likely place orders at. We're looking at 110,000. We're looking at 115. We're looking at 120 psychological numbers. And then if we had to go to strengthen the idea of when Bitcoin could top, you could use cycle theory, such as the 4-year cycle theory. And there are two potential top dates based on the cycle theory. You have the traditional 1064-day theory, which suggests a potential macro top for Bitcoin on October 6, 2025, or you could look at a new theory which I've discovered over here, which is the -2 bar theory, which is a diminishing cycle theory, which essentially is the traditional cycle, which factors in the shortening of the cycle, each cycle by 2 bars, which brings us to a potential top in the first week of August 2025. Again, this isn't to predict when the top will occur or the price of the top. This is to give key dates where you should be paying attention to based on cyclical structures of how the price has moved in the past. The 4-year cycle will not indefinitely play out. At some point it will break. It may even break this time. But it's not about using it for exact decision making or targets. It is about confluence and looking at key dates where we could see dramatic reactions in the market. Okay? So when we're looking at Bitcoin over here, there are some catalysts, but the catalysts are more ambiguous. We need to see how that develops. When we're looking at the bullish case scenario, the potential targets for Bitcoin based on a structural analysis, we could take a measured move and apply it to the breakout point, which would take us into the 120. So we know 120, based on how the price action is developing, is a theoretical / a logical point of which the price could reach in best case scenarios. So for us to see this move, we need to look at the level by level. There is no point speculating on what will happen with news, the economy. There's no point of speculation on the 4-year cycle. We need to watch the price level by level. At the moment, if we break through the weekly downtrend, we will see a rally to 110. 110 is a major resistance where we should expect rejections from. However, if we break 110, the expectation then is we continue potentially as high as 120,000. If we're looking at the bearish scenario is that we have not yet seen a positive momentum shift here. We do still have that bearish divergence developed, which could invalidate, but for now it is still there. And therefore, if we do see any sort of pullback which takes us under $106.4 to $106,000, we run the risk of correcting all the way back down to 102,000, and thus we have squandered the potential for the rally back upwards, as we would be creating a lower high from that prior high. So to summarize everything very quickly before we jump over to total cryptocurrency market cap, the market is looking good. Bitcoin has had a fantastic weekly close. It is lining up for a rally toward the upside, which we'll discuss in a second. However, we have not quite broken through exactly what we need to see to be fully confident in this move. The probabilities are stacked in favor of that move, but it is not 100% out of the woods yet. When we're looking at potential top dates and top targets, it is a lot of speculation around news events, around policy, around global conflicts, and of course around cycle theory, which suggests potential top dates, which cannot be determined until they occur. So you have to trade more on a level by level basis and use all of that as confluence to your decision making. When we're looking at the bearish scenario, the potential for a bearish correction is unlikely while we remain above 106,000. If we lose 106,000, it becomes increasingly and incredibly more probable that we do see downward directional moves. When we're looking at something like the total cryptocurrency market cap and total altcoin market cap, as we discussed in yesterday's video, both of these charts are looking primed for continuations upwards. It is really Bitcoin that will now need to facilitate that market rally. We can see positive momentum shifts occurring on both the total and for altcoins. The altcoin market breaking through the baseline of the Ichimoku cloud. This is a very good sign that the market is ready to rally upwards again, with Bitcoin being the majority of Bitcoin the market dominance. A lot does rest on how Bitcoin reacts and performs around this major level of resistance it is retesting, and if it performs exceptionally well, we will see these markets aggressively rally from this point. Will we see a quote-unquote altcoin season? Well, I don't think so. I never really think we're going to see that altcoin season anymore. I think altcoins, for the most part, what we've seen throughout the history of the last few years is that altcoin rallies have been more temperamental, and we have seen them more situational. So yeah, we have seen some fantastic altcoin rallies. Yeah, we will see some more fantastic altcoin rallies, but to expect a 2021 or 2020 cycle or 2017 cycle to facilitate that, we need to see a heap of money printed. We need to see a catalyst for such an explosive rally. I don't think it's just going to happen out of the blue because we're nearing the end of the quote-unquote 4-year cycle, which may not even play out. So level by level, watch to see how it plays out. Thank you for tuning in, guys. Have a fantastic rest of your day. I'll catch you guys all in tomorrow's video. I'll see you then. Bye.